Welcome back to Primary Source China Investment and show D2. This week, it's a little bit of a mashup between policy and investment, and it's going to be neatly wrapped up in one asset class called property. And the reason we're doing that is, of course, it remains in the news, and Evergrande is, of course, at the top of everybody's opinion and thought process, and all of the people with vested interests have given their opinions and told you what's going to happen. But peng.guo and I thought it would be a little bit more interesting to look at property in a larger context from the consumer perspective, from the developer perspective, and of course, from the government perspective. And it's such a large industry, it needs to be broken down this way. And from the consumer level, it's fairly straightforward. Buy an apartment, the price goes up, get divorced so you can buy a second place and the price also goes up, and just keep holding that. In terms of default risk, down payments tend to be very, very high in China. So default risk is very low. So you buy your apartment, you hold on to it, and it goes up. And this thesis has been in place for 2 decades. It's also led to plenty of empty apartments, but by and large, it's been a fantastically positive investment for the consumer. And hey, you can even live in one. So if the property prices continue to go up, and now we're hearing like wacky stories that property prices in the secondary market are actually higher than the primary market because the government has moved in to set caps on how much property can sell for at the initial price. It's sort of like an IPO cap. So there's a lot of things that the government has done. But on the consumer level, would you agree, peng.guo, that's really been the path for the last 2 decades? Just buy, hold, and get fantastically wealthy through real estate.
That's definitely a good question. From my personal experience or what I said from the friends, co-worker, whatever, I know the people in China, the best investment is real estate. The problem is you needed to buy the early rather than right now.
Yeah, but we've been
any other investment in China is better than the real estate investment as long as you get it early. I think right now it's really probably started a downtrend. So real estate is a big cycle. So as long as it started, it's pretty hard to get a recovery in short term.
Yeah, I think people have been saying that for a long time though, because I can remember when people were buying things for 20,000 renminbi a square meter, then 40, then 60, and everybody was saying, oh, it's never going to go, and then 80, and then 100, so it has been a very up and to the right trade, and people have bought more and more apartments. And in Shanghai and Beijing, as the subway expands, I buy a place near where the subway is going to be. I mean, there's a whole investment thesis behind this, and it's been right for all this time. So the question is it changing now? Is there something different now?
I think right now is definitely they want to control the debt ratio for the real estate industry. And obviously, a lot of the companies, they still rely on the high debt and easily to break up their capital flow. So as soon as that get broken, like the Evergrande, it's everything's gone.
Yeah, because from the government perspective, and this is the shift here, from the government perspective, GDP growth has largely been driven by real estate. Upwards of 30% of GDP is directly related to the real estate sector. So it is a huge industry that Beijing continuously look towards. So when GDP growth has to go, Beijing will just go to the banks and say you need to lend. And that's an addictive cycle. And that's worked because GDP continues to grow. But now even Xi Jinping is saying, oh, we want this quality growth, not this sort of fake growth, which real estate is a part of. So that's going to be hard to break. And then at the next level down, remember how real estate gets built in China. You have a lot of localities who are auctioning off the land, and those localities get the proceeds. So that's really driven a lot of the growth, a lot of the development, and unfortunately, a lot of corruption as well.
That's true. Is this industry need a lot of the people skill to move forward. So that's easily cause the corruption during the process. And the stake is pretty so high. So this is easily to trigger it. Unfortunately, I think obviously the currency get increased every year and the purchase power significantly drop. So like the 30 years ago, 10,000 renminbi is equals to almost 2 million renminbi purchase power right now. So that's why real estate is the best business over the years. Right. I think right now is the entire economic structure get changed. Obviously, whoever is the big companies, if they cannot control or manage their balance sheet very well, they will get a huge problem.
Yeah, you mentioned earlier in the conversation about debt. I mean, China's debt to GDP ratio is like 270%, and that's just not sustainable. And a lot of that has to do with real estate, because obviously we're looking at Evergrande here, and one point that people are pointing out is common prosperity seems to mean taking care of the people that bought apartments and bought wealth management products, which happen to be the wealthiest people in China. So I'm not really sure that the policy is fitting the narrative right now.
Yeah, I think the government don't want the bank become the landlord. Yeah, they use the high leverage, make the profit. The profit belongs to themselves, and the risk leave to the bank. Obviously, government want to control and change in such kind of the situation.
Yeah, this moral hazard has existed for a long time. I'm not sure it changes overnight. And the other thing is a lot of the knock-on effects of the real estate bubble, whatever you want to call it, expansion, I'm not putting names on things, is because of government policy. Government has issued the 3 red lines, and before that they were issuing you can't buy second apartments and you can only have a hukou and buy an apartment. I mean, there were so many top-down policies that were implemented. I think that's created more problems down the line. And right now you're dealing with a massive industry that contributes a chunk of GDP. And how do you reform that industry?
Yeah, that's you're absolutely right. I think a government policy is really not like the new things. So everybody knows in the China, so there's some of the change in the real estate business. I think another big change is real estate tax related reform. So the local government is so dependent on this kind of the sector, they cannot find other bigger tax resources to replace it. So there's no way. They don't want the price get up, otherwise make the bubble get bigger. Obviously, they don't want the price down. That will cause a crash. So it's stuck in the middle.
Yeah, I think you're right about the property tax, because right now there's no property tax in China. There's maybe some commercial tax on real estate, but there's not a property tax as you and I might know it. So they may follow what Hong Kong does, because Hong Kong does get a ton of the revenues for the government through real estate, through transfer taxes and through stamp taxes and those kind of things, but also a property tax. And China's been threatening to do that. Shanghai basically really threatened to do that, but so far there's been no implementation of a property tax. That's probably the smarter way to do that, other than doing this one-time sale of plots of land to developers, which is what they've been doing for 20 years.
That's true. I think in China, back to the 1980s, this is a 2 model. One is called the Hong Kong model, another one called the Singapore model. So Singapore model is, so this really depends who's the primary objective for this kind of model. Like the Singapore is really service for like the middle class and the lower income of the people. So that do the pretty good job for the government to provide the housing, and the policy also related to that. Obviously, Hong Kong is really controlled by the real estate tycoon. So those guys make the decision for everything, and the entire city and works for them. So unfortunately, China learned from the Hong Kong because it's good for themselves, and even the government do some kind of work, but the majority is still follow the Hong Kong's model. And right now, it just suffer the consequence. All the industry other than the real estate suffer the high cost. And also this causes the debt and waste of the social resources. So it's really time to change. But the government say this a lot, but the company, they just don't believe it. The industry, they just want to wait. They don't want to take the actions early. And now, as soon as the government really take the action, they just crash. You see the Evergrande, they crashed pretty much like over the night. So this is not surprised because even a couple of years ago, a lot of people already know this problem. It's like the social reform is too big for the entire China.
It's daunting. You know, the other thing was, people forget Huarong went bankrupt last month. I mean, that's like totally erased from the news, and that was a big bank with a lot of bad debt. And I'm not saying that the Evergrande debt is bad. They're actually backed by assets. So I'm sure there will be a lot of vultures coming in and picking off those unfinished products or those plots of land. I don't think it's going to resonate through the economy. And you know, we talked about this, you know, last week or 2 weeks ago, because there's real assets there, and you know, it doesn't look like overnight people are going to say, well, I don't want to buy real estate. So I do think that Evergrande as an entity may not exist. It may, you know, exist in some other function or form, and government may take huge chunks of that. But your point is valid. Like, people saw this coming a while back. It's you know, sort of like Ernest Hemingway saying in The Sun Also Rises, you know, how does bankruptcy happen? Well, gradually and then suddenly, and that's exactly what's happened. There's probably other shoes to drop, and there's probably other industries as well. You know, real estate is the biggest, but you know, so far we've had tech rec, we've had property, we've had education. A lot of these industries are under fire. There's no other way to describe that. And there will be a realignment of how these businesses will be able to function going forward. And I did want to bring up the charts that we talk about, and we'll put this up on the video, but year to date, what's happened with the US stocks, the Chinese stocks listed in the US and the China stocks listed in China. And there's bifurcation. I mean, it's very obvious. As of March, it's gone two different ways. And the A shares have really held up, and A shares year to date are down 5.5%, and that's ASHR. But the KWEB and the PGJ, those are down 35-40% year to date. And it looks like they may have bottomed, but I still believe all of these Chinese companies listed in the US are going to be forced to list back on the mainland. And I don't see that changing going forward.
I see many news about that, but right now I don't see any real actions or for companies to make the change. So probably they are still waiting for the whatever the policy related stuff. The policy is always a change. The policy always changes quickly, so it's better just to wait and let those guys to make the final decision. I think this policy maker also see the response from the market. So they don't want to crash the market, and they don't want to put the huge impact to the market. But they do try to solve the problem. But yeah, it's just have to follow up. I think everybody right now is keep eyes on the market.
Yeah,
United States and China is different. So it's most of the Chinese people, their wealth is still in the real estate area. Yeah, it's not in the stock. Not like the United States.
Yeah, and the thing is, you and I have been pounding the table for, I think, as long as we've been doing this show. Not all Chinese stocks are the same, and
that's true.
You know, if I'm the CSRC or if I'm policymakers in China, and I see that there's going to be some losses in the US for Chinese stocks, that's less of a priority than losses on the mainland for A-share stocks. So again, I will continue to say, if you want to own Chinese stocks, you should own mainland stocks. You shouldn't own US stocks that are Chinese by nature.
That's true. Yeah.
Yeah. So I think we're gonna leave it there for this week. And there's enough on property, but just understand, when you're hearing something, people are usually pitching their book. And if you read Twitter or if you read LinkedIn, you hear a lot of people saying either China's the best place in the world to invest, or China's going down tomorrow. Nuance doesn't sell, unfortunately. And you know, that's what peng.guo and I talk about, is the nuance, because there's always some reason in between. So with that, we'll let it go. And hopefully tune in, subscribe, and we'll see you next week. Thanks.
Thank you.